You ever hear about like a financial thing and think, wow, is that too good to be true?
Yeah.
That's how I felt at first about compound interest.
Oh, yeah.
But this deep dive,
Mm-hmm.
we're going to really get into how much power is behind this one idea,
Really?
especially for anyone you know who's just starting to figure out their money.
Especially when you're starting out. Yeah.
Yeah.
It's amazing how something so simple can have like such a huge impact down the road on your finances.
Really is. And it's not like getting rich quick. It's more about that slow and steady
Yeah,
wins the race thing with your money.
absolutely.
To make this really clear, let's say there's this person named Sarah.
Okay.
She's in her 20s,
All right.
just starting out.
Mm-hmm.
And she's like, okay, I'm going to put away $200 every month.
$200 a month.
Yeah.
Let's see what happens when we add in that compound interest magic.
Okay.
So after a year, let's say she gets like a 7% return.
Mm-hmm.
Not out of the question.
Not crazy.
She's at about 2,500.
Okay, so a little over $100 in gains.
Yeah.
Not bad.
Not bad at all, but here's where it gets interesting.
Okay.
Year 2 rolls around. She's still putting in her $200 a month,
Right.
but now the returns, they're not just on that first money she put in.
Mm-hmm.
It's on that whole 2,500
Oh, wow.
plus the new money.
Oh.
So it's like returns on top of returns.
So it's making money.
Yeah, that's the snowball rolling down the hill.
That's crazy.
It just gets bigger and bigger.
But how big are we talking? Like down the line?
Okay, so let's say Sarah keeps this up until she retires at 65.
Okay.
Same $200 a month.
Mm-hmm.
Still a 7% average return.
Okay.
That original 96,000.
Yeah.
It's now worth over $1.1 million.
Wait, $1 million
Yeah.
from $200 a month?
It's the power of time, my friend.
That's incredible.
That's the power of time and consistency.
Okay, so that's the time part.
And that brings us to...
Starting early.
Oh, that's huge. Yeah.
Right.
If Sarah had waited just 10 years,
Yeah.
she'd have to put in almost double every month
Really?
to get to that million.
Wow.
Those early years are like gold.
So it's like you plant this little seed and it turns into like an oak tree.
Exactly.
But okay, we got to talk about inflation.
Yeah.
$1 million today.
Yeah.
It's not going to buy as much stuff in 40 years.
Not at all. It's a great point.
So how do we know if our money's actually growing faster than inflation?
So while Sarah's nest egg sounds amazing, right?
Yep.
We got to think about how inflation eats away at it over time.
Yep.
Let's say you buy a bunch of stuff for $100 today.
Okay.
In 40 years. That same stuff, it could easily cost you $300.
So how do we make sure we're actually beating inflation with our investments?
That comes down to choosing the right investments.
Okay.
Now, we used a 7% return for Sarah as an example.
Right.
What you actually get back
Yeah.
depends on what you choose to invest in
Mm-hmm.
and your risk tolerance.
Okay. Before we go too far down that road,
Sure.
can we talk about risk tolerance for a second?
Oh, yeah.
Because that just sounds kind of scary.
It's not as bad as it sounds.
Okay.
It just means how comfortable you are with maybe losing some money on your investments.
Mhm.
So if you have a high tolerance,
Yeah.
you're probably cool with maybe losing a little
Okay.
for the chance to earn a lot more.
Okay.
You might go for something like individual stocks.
Right.
They can be up and down a lot, but they can also grow like crazy.
Yeah.
But if you're more cautious,
Yeah.
you want that lower risk.
Right.
Maybe you go for bonds or even like a high yield savings account.
Okay.
The returns might be smaller,
Right.
but you're less likely to lose money.
So it's all about finding that balance
Exactly.
between risk and reward.
Risk and reward, exactly.
And that's where diversification comes in.
Yeah.
So you don't put all your eggs in one basket.
Don't put all your eggs in one basket.
No. You spread your investments out
Spread them around.
to lower the risk.
Think of it like a well-balanced meal.
Okay.
You don't want to eat just one type of food all the time.
That's true.
You need variety to be healthy.
Right.
Same with your investments.
I like that.
You need a variety to build a healthy portfolio.
Okay. I know we've given you guys a lot to think about.
Yeah.
Oh, we're going to break it all down
You're going to go deeper.
as we keep going with our deep dive.
But there's one more thing about compound interest I want to mention.
Okay.
It's not all about the numbers. It's about psychology, too.
Oh, interesting.
Because when you're investing consistently for a long time,
Yeah.
you're learning to be disciplined with your money.
Okay.
And that discipline, it can affect other parts of your life, too.
I like that.
Right.
Yeah.
It's like switching your thinking from I want it now
Oh.
to I'm playing the long game.
And that's powerful.
Very powerful.
So let's get into some of those investment options
Yeah.
and strategies.
Let's do.
Where should people start if they're ready to put their money to work?
Well, if you're just starting out, one of the easiest and best ways is through index funds.
Okay, wait, what's an index fund?
So basically, it's like a basket of stocks
Okay.
that tracks a specific market index,
Mm-hmm.
like the S&P 500.
Oh,
Instead of trying to pick the stocks that'll do well,
right.
you're buying a little piece of all the companies in that index.
So it's like instant diversification.
It is.
Okay.
And because index funds are passively managed, they just follow the index.
Okay.
They usually have lower fees than actively managed funds.
Lower fees.
Yeah.
Diversification. Sounds pretty good.
It's a great place to start.
What else is there? Especially for people who aren't as afraid of risk.
Yeah, so another popular choice is exchange-traded funds,
Okay.
or ETFs.
ETFs.
Yeah, they're like index funds,
Okay.
in that they track a specific index or sector, but they're traded on stock exchanges, like individual stocks.
So they're more flexible.
Yeah, you can buy and sell ETFs throughout the day.
Interesting.
That can be appealing if you want more control.
Okay, now earlier we mentioned bonds
Yeah.
as a lower risk option.
Right.
How do those work?
So bonds are basically like loans you make to the government or to companies.
Okay.
They usually give you lower returns than stocks,
Okay.
but they're not as risky. They can be good for like balancing out your portfolio.
So there's like a whole range of options.
Yeah, there's a whole spectrum.
Depending on what you're looking for.
Exactly. And remember, investing is not one size fits all.
Right.
What works for one person might not be right for another.
So where do you even begin to figure this all out?
You do your research
Okay.
and get some advice.
Okay.
There's a ton of great resources online.
Oh, yeah.
Websites, blogs, podcasts, even classes.
And there's always financial advisors.
Yeah, they can give you one-on-one advice.
Right.
But even if you go that route,
Yeah.
it's good to understand the basics.
Right, like what we're talking about today.
Exactly. Knowledge is power.
Yeah, knowledge is power.
The more you know about investing, the more confident you'll be
Yeah.
making those decisions.
So let's switch gears a bit
Okay.
and talk about specific ways
Right.
to make the most of compound interest.
Yeah.
What are some strategies?
One of the easiest and best is to automate your investments.
Okay.
Set up a regular automatic transfer from your checking to your investment account.
Right.
Even if it's just a little bit each month,
I love that.
it takes the thinking out of it.
Right.
And make sure you're always contributing.
Yeah, you're not even thinking about it.
Yeah, it's like putting your finances on autopilot.
I love that.
Yeah.
Okay, now what about reinvesting those earnings?
Oh, yeah.
We talked about the snowball,
Yeah.
but how do we actually make those returns work for us?
So this is where reinvesting dividends comes in.
Okay.
A lot of stocks pay out part of their profits
Right.
to shareholders in the form of dividends.
So instead of taking that money, you use it to buy more stock.
Exactly. It's like adding fuel to the fire.
So now I'm curious.
Yeah,
Picking individual stocks can be risky,
it can be. Yeah.
but are there examples of people who like really mastered compound interest
Oh, yeah.
historically?
Absolutely.
Like who?
The most famous one probably is Warren Buffett.
Oh, yeah.
He's considered one of the best investors of all time.
Right.
And his whole philosophy,
Yeah.
it's all about compound growth.
I heard he started investing when he was a kid.
Yeah, he bought his first stock when he was 11.
Wow.
And he's been all about long-term investing ever since.
So what can we learn from him?
Patience, discipline,
Okay.
and really understanding the businesses he invests in.
Right.
He doesn't go for quick wins or get caught up in the hype.
Okay.
He finds companies that are undervalued with strong fundamentals,
Yeah.
and then he holds on to them for the long haul.
Oh, wow.
He lets that compound interest do its thing.
He's playing the long game, not trying to time the market or anything.
Exactly, and that's a key takeaway for everyone.
Okay.
Compound interest is a marathon, not a sprint.
Right.
It's about building wealth over time.
So Sarah's story is inspiring,
Oh, for sure.
but real life investing is a little more complicated.
Yeah, it
Yeah.
is. There are ups and downs in the market, recessions, unexpected stuff.
Right.
All that can affect your investments.
But even with those challenges,
yeah,
the basics of compound interest still hold true.
they do.
Right.
Yeah.
So if you start early,
Yeah.
invest consistently,
Yeah.
make smart decisions,
Mm-hmm.
you can use compound growth to create a more secure financial future.
You absolutely can.
We've covered a lot today,
We have.
from the basics of compound interest
Yeah.
to specific strategies. We even talked about Warren Buffett.
The legend himself.
But before we wrap up,
Yeah.
I want to leave you with one last thought.
All right.
Imagine you could fast forward to your future self,
Yeah.
the one who listened to all this
Mm-hmm.
and made consistent, smart investments over the years.
Yeah.
What would that future you say to you today?
Oh, that's a great question.
What advice would they give?
What would they say? I think they'd be pretty grateful
Yeah.
for the choices they made early on.
Right.
They might even say something like, I'm so proud of you
Yeah.
for taking charge of your finances
Right.
and for investing in your future.
Yeah. It's kind of wild to think that what we do today, even like small things,
Yeah,
can have such a big impact later on.
it's true. Small steps lead to big results.
So what are some things our listeners can do like right now to set themselves up for success?
First things first,
Okay.
set some clear financial goals.
Right.
What do you want to achieve with your investments?
Okay.
Saving for retirement, down payment on a house,
Right.
your kids' education.
Yeah.
Figure out what you're aiming for.
Okay. So having those goals in mind
Yeah,
really gives you like direction.
exactly. It keeps you motivated. Once you know what you're working towards, you can make a budget
Okay.
and see where you can free up some cash to invest. Remember, it doesn't have to be a ton of money.
Right.
Even small amounts consistently,
Yeah.
they add up over time.
Thanks to compounding.
Compounding, that's the key.
Now we talked about resources.
Yeah.
Can you give us some specific places to start?
Oh, absolutely.
Like websites or?
Websites for sure.
Okay.
Investopedia NerdWallet. They have so much information for all levels of investors.
Okay.
You can find articles, tutorials, even calculators
Wow.
to help you plan and track your progress.
Don't forget about books.
Oh, yeah. Books are great.
There are some classics out there.
Yeah.
Like The Intelligent Investor,
That's a good one.
The Little Book of Common Sense Investing.
Classics for a reason.
Yeah. And for the visual learners,
Yeah.
tons of YouTube channels, online courses.
So many options.
It's amazing how much info is out there.
Right at your fingertips.
Yeah, like no excuses.
No excuses.
And don't be afraid to ask for help
Oh, yeah, that's important.
if you're feeling lost or overwhelmed.
Especially if you're just starting out.
Yeah.
A financial advisor can be a lifesaver.
Yeah.
They can give you personalized guidance
Right.
and help you make a plan that works for you.
That's a good point because sometimes having a pro in your corner
Yeah.
makes all the difference,
It could be really helpful.
especially with all the complicated stuff in finance.
It can get confusing for sure.
Yeah.
So as we wrap up this deep dive into compound interest,
Okay.
I want to leave you with one last thought.
Right.
Don't let the fear of messing up or not knowing enough
Yeah.
stop you from getting started.
It's way better to start small
Yeah,
and learn along the way
absolutely.
than to just sit there and miss out
Yeah.
on the chance to grow your wealth.
It's a journey, not a race.
Yeah.
It's about making those steady choices over time. Right.
And letting that compound interest do its magic.
So to everyone listening,
Yeah.
take that first step.
Today.
Today, educate yourself.
Yes.
Set some goals and start investing
You won't regret it.
in your future.
The rewards are worth it.
Yeah,
On that note, we'll leave you to think about your own path to financial freedom.
that's a good point.
Until next time,
Yeah.
keep learning, keep growing,
Mhm.
and keep compounding those gains.
That's all for this deep dive on the magic of compound interest.
Thanks for listening. I think they'd say, I'm so proud of you
Yeah,
for taking charge of your money
right.
and for having the foresight to invest in your future.
It's amazing to think like the small decisions we make now
Yep.
can make such a difference later on.
Absolutely, they can.
So what can our listeners do right now to really get on the right track?
Well, first things first, I'd say set some financial goals.
Okay.
What do you want to achieve with your investments? Are you saving for retirement?
A down payment on a house,
Yeah.
maybe your kids' education.
Yeah, right.
You got to figure out what you're working towards.
Yeah. So having those goals can give you that motivation.
That's like a roadmap.
Yeah.
Once you know where you're going, you can create a budget
Right.
and see where you can free up some cash to invest.
Okay. And remember, it doesn't have to be a huge amount.
No, not at all.
Right.
Even small, consistent contributions,
Yeah.
they can really grow over time.
Because of that compounding.
Compounding, that's the secret sauce.
Okay. Now, earlier you mentioned some resources.
Yeah.
Can you give our listeners some specific places to start their research?
Absolutely. So there are some great websites out there,
Okay.
like Investopedia NerdWallet. They have a ton of info for investors of all levels.
Okay.
You can find articles, tutorials, and even calculators.
Oh, calculators too.
Yeah, to help you plan and track your progress.
And don't forget about books.
Oh, yeah, books are great too.
There are some classics that offer timeless advice,
Yeah, for sure.
like The Intelligent Investor.
a classic.
The Little Book of Common Sense Investing.
Yeah, those are great recommendations.
And for those who prefer like a visual approach,
Oh yeah, there are tons of YouTube channels and online courses.
it seems like there's really no excuse not to educate ourselves these days.
Yep, the information is out there.
Yeah, it's all at our fingertips.
Exactly, so take advantage of it.
And don't be afraid to ask for help
Never be afraid to ask for help.
if you're feeling lost or overwhelmed.
Yeah, especially with all the complex stuff in finance.
Right?
Sometimes having a pro in your corner can make all the difference.
Yeah, like a financial advisor.
Exactly. They can offer personalized advice.
Right.
Help you create a plan that fits your goals and your risk tolerance.
That's a great point.
So as we wrap up our deep dive on compound interest, I want to leave you with this final thought.
Okay.
Don't let fear hold you back.
Fear of making a mistake.
Yeah, fear of not knowing enough. Yeah.
Just get started.
It's better to start small and learn along the way
Way better.
than to do nothing and miss out
Exactly, you got it.
on the chance to grow your wealth.
It's a journey, not a sprint.
Right.
It's about consistency and making smart choices
Over time.
and letting that compound interest work its magic.
So to all our listeners out there,
Yeah.
take that first step today.
Take action.
Educate yourself, set some goals, and start investing in your future.
You got this.
The rewards will be well worth it.
They absolutely will.
Thanks for joining us on this deep dive into the magic of compound interest.
Until next time, keep learning, keep growing, and keep compounding those gains.